Well, hello, Mavericks. Nice to see you here. We are here for the US Payroll Report on October 7th. So, good morning, good afternoon to our European traders, and good evening to some of our Asian traders. Nice to see everyone here. Okay, well, let's jump into where we are and what we're looking for. We talked about this last weekend over the currency room. We talked about how a very strong jobs report is actually going to be very bad for the equity markets. And the reason for that is that the equity markets are really hoping that the Fed backs off their very aggressive interest rate raising policy. And they've said that they are going to keep raising rates until the job market weakens. Well, this is the job market right here. And if the jobs market doesn't weaken, then the market is going to have to price in even higher interest rates, which means a stronger dollar. The dollar's already at 20-year highs. And so a very strong report is going to be negative for the markets. Now, the expectations are for around 250,000 jobs, 3.7% unemployment, and a plus 0.3% wage gain. Let's also not forget that we have the Canadian employment report as well. And the Canadian employment report is supposed to be quite strong, 19.5 thousand jobs. Now look, whenever we have this to where we have US and Canadian employment reports stacked up on the same day, we always have to think about, I call it a double whammy. I know that is not a real technical term, but the double whammy is where one of these has a very good announcement, one of these has a very bad announcement. And you can really catch a really big trade on like a US CAD pairing. Now, that makes this a little bit more complex because sometimes you get good news on both and they both rise, or sometimes you get bad news on both and they both fall, and all of a sudden it wasn't the best trade. I'm not specifically going to be looking at dollar CAD here because, like I said, it makes it more complex. You have to be right on both, where I just want to be focused on dollar here to just really focus on where's the dollar going to go and what's it doing. Before we jump into our analysis of the charts, let's quickly go through what we're looking for. Trading news. We can enter before, we can enter on the news, and we can order second stage. Entering before the news is the most risky. That's going to cause the possibility to see a lot of slippage on any sort of stop orders we have around the trade. We're not going to do that on this one. We expect there to be a big move at first, and then either a reversal or a follow through. I do think there is a good possibility that we get the whipsaw today. Now, what the whipsaw is where you get a huge move up. So if you went long and put in a stop, you get stopped out. If you go short and you put in a stop, you get stopped out. And in the end, it doesn't go anywhere. I think there's a good possibility we get the whipsaw. So I'm looking at a second stage entry to where I'm going to let that first little bit happen. So I'm going to let this report go. I'm going to wait 2 to 3 minutes at least, let all the craziness shake out. And then again, the question is reversal or continuation. And that's really what we're going to be trading here on US Payroll's report. So let's jump into the charts here. And I'm going to start off with the dollar basket. And I'm going to start out with a daily chart. And if we take a look at the daily chart, you can see that we are in the midst of a pullback. And this is looks like at this point, it looks like a bull flag pattern. A bull flag pattern is where you get this really strong move, and then you get this downtrend. You get this downtrend, but it's very, very shallow. It's very shallow, and it doesn't really erase much of this big gain. So I'm looking at dollar, and I'm saying, hey, this is in a bullish chart pattern on the daily chart. And if I come back and I go down to like a 4-hour chart, we can see that we are still within this wave. So I'm looking at this saying, okay, there's a really good possibility that this is a bull flag pattern. And we're really just waiting for the breakout above this, 129.5. Look, this is the dollar basket. We're going to be looking at the dollar over individual currency crosses. But as a whole, the dollar itself looks like it's in quite a bullish pattern. It hasn't broken out yet, but the big move looks like it's likely to be more on the upside than the downside based on our charts. So at this point, we just need to find, okay, what do we want to pair it against? What are we looking at? What's the weakest? As I said earlier, I'm going to ignore the CAD. If you did want to trade the CAD looks fairly neutral here. So I'm not super interested. But I'm looking at, okay, what do I want to sell it against? Here we come over to the pound, and the pound actually looks quite good. I really like the pound as just a long trade here. I was looking at it this morning and thinking, hey, this is a nice setup here on the pound. We got the daily chart where we've clearly reversed. We're having this little pullback. And you can see, same thing here, very shallow pullback. Very shallow pullback from this monster gain that we had off the bottom. We've now crossed it with a parabolic SAR. We got we got RSI above the 50. So it looks like the pound is a good setup on the long side. Now I'm looking for something to be short. So for me, against the dollar, I'm not interested in pound versus dollar. But for any of you traders out there that say, hey, I want to avoid the dollar during this crazy period, the pound looks like the best trade out here on the long side. Let's talk about euro. So euro's had this big run higher over the last week or two. And you can see we're just in a shallow pullback. I'm looking for something that's weak, not for something that's just had a strong run and pulling back a little bit. So I'm not interested in euro. Here's Swiss franc. Very, very boring. We even got comments from SNB's Jordan, Swiss National Bank's Jordan president, and they were very hawkish on inflation, and the Swiss franc didn't move. So we're looking for something that's going to move. Let's come over here to yen. Again, yen is looking like it is stuck. We've been stuck here for about 2 weeks. I'm not interested in trading things that are just going nowhere. So that leaves us really with the Aussie and the CAD. And here we come to things that are starting to look weak. We have a very, very weak tape on Aussie moving lower. We actually have Kiwi that was very weak, but you can see that over the past week or so, the Kiwi has found its footing. It's been going sideways. Look, this could just be a pause before it moves lower. But if we were looking at all these currency crosses, it's clear that the Aussie is the weakest out of all of them. And if you ever have a question on what is weaker, Aussie or Kiwi, you just throw those together. And we can see over the last couple of days, we have seen the Aussie strengthen against the Kiwi. So Aussie is strengthening a little bit against the Kiwi, which kind of tells us that Kiwi is, my first opinion was Aussie was stronger. And then I look at Aussie Kiwi and it's telling me, oh, wait, Aussie's actually showing a little bit of relative strength lately than the Kiwi. So going into the report, I'm looking at Aussie and Kiwi, but because of the chart I just looked at, I'm looking at Kiwi dollar first, Aussie dollar second. So let's break this down. Let's look at this on a daily chart first. You can see we've got a really nice little bear rally here. Boy, I can't even call this a bear rally. This is more of a low base. So we are just sitting here down at the lower end of these levels after a big plunge lower. All right, we're starting to get some pressure putting on it. You can see whenever this 13 EMA hits it, it pushes it lower. We've got the same thing happening here. But let's talk about entry prices. Let's talk about entry prices. Let's go into a 1 hour chart. And it's pretty clear that the support here for the last little bit, let's go to where we can see the support level. 55.75. 55.75 is this low we set back on September 28th. So that's really going to be the point that I'm looking at. 55.75 is going to be it's not going to be my entry. It's going to be my place where if it goes below that, I'm going to now start to look for my entry. If you wanted to enter on the announcement, meaning, hey, you know what? I want to get in when the break happens. You could throw an order out there at 55.70, 55.75, somewhere around there. And again, we always use stop limit orders. We always use stop limit orders on news trades, where you put your stop at like 55.75 and then you put your limit at 55.55, meaning you're giving it a 20 pip window to get caught. And if you don't catch a trade in that window, you don't catch it at all. This is going to protect you from a fast moving market. If you just put in a stop order, hey, I want you to sell it if it gets to 55.75. If this thing really plunges, you may not get filled until 55.30, 55.20. And all of a sudden, your risk reward doesn't make much sense at that point. So let's take a look at potential targets here. Boy, there's just not a lot. There's nothing here in the recent past is where this target is going to be. Boy, we've got to go back all the way to COVID. COVID at 55, 55.80. Boy, we are down to COVID lows. That's just crazy. So COVID lows here are 54.70. That gives us roughly about 100 pips. That is a 2% move from here. I don't think that's going to happen today, but 2% is definitely a big enough trade for me to go after. So here's what I like to do. I like to get into my TWS. I like to identify, again, the pair that I'm looking to trade, which is Kiwi dollar. And what I like to do is I like to set up my my orders in advance. Now, all I'm going to be doing is I'm going to be setting them up. I'm not going to be hitting execute, but I'm just going to be setting it up here. So I want my order to be below this last low that we're talking about. Right here. It's really nice. All I do is I right click on the chart. I'm going to put in my sell order. I'm going to put it right down here where I want it to be. I'm going to go 55.72. Of course, always adjust your position size for your account accordingly. I'm going to go to my stop limit. Again, my stop price is going to be 56.72. Sorry, 55.72. And my limit price is going to be 55.55. Again, what this does, this makes it to where I will only get filled within that window. The order will try to get filled at 55.72, but it won't fill below 55.55. All right, so we are, wow, I talked right through the announcement. We've already got the jobs number out, and you can see there's not a lot of movement early on. Dollar strength initially, but that's about it. This is not a big move here on Kiwi dollar off of this report. I wasn't looking to get in on the report. I wanted to see the initial move, the initial freak out. And again, two things are going to happen. Either that initial move is going to be faded, and we play that a lot here at Maverick, that, hey, once that initial spike happens, then we basically go the other way on it. But this one, I'm looking for a continuation. All right, we've got the numbers. Oh boy, the numbers are not great. They're actually fantastic numbers, which is bad for the market. We've got 263,000 gains, but the unemployment rate dropped to 3.5%. That is not good. Equities are definitely not going to like that. Let's check in on the equity market real quick. You can see there's not a whole lot of movement here in dollar. There's just not a lot of movement. So let's check in and see what's happening on equities. Yep, sure enough, equities are headed lower. They did not like that announcement. Equities are headed lower. So look, we like the trade, strong dollar, got dollar Kiwi looking at it. This is definitely, again, the news that the market didn't want. So this is where, again, second stage entry gives you the ability to say, okay, let's watch the freak out happen. Let's watch the panic. And then we get to decide, okay, do we want to enter this trade? Now, I like this trade. I'm going to play this on a continuation, meaning I think the initial move continues. So I'm going to move my order up to the low of the candle that just happened. So I'm up here at 56.13. I'm going to go ahead and make this order live. So again, like I said, I get to sit out the craziness. I get to sit out the potential whipsaw. I get to sit out of all the potential stuff that happens. And then I get to look at everything and say, okay, looked at the numbers, looked at the equity markets, looked at everything. Okay, you know what? I think I do want to be on this trade. Now I got to adjust my order to be in a different place. And like I said, I want to get into this trade if there's follow through on the dollar. We got an initial move where we got a little bit of strength in the dollar. I want to see if that holds. Right now, let me go to a little bit shorter term chart. you can see that the price action initially was to the downside, and now we're starting to get a little bit of reversal. We're getting a little bit of, okay, the dollar is coming off of its highs. The Kiwi is strengthening a little bit. So this is cool. We just get to hang out. Hey, if there's no follow through on this trade, we never get in. We'll just, leave this order out there, 30 minutes into it. That's my rule. 30 minutes after the announcement, if it hasn't gotten filled, I just cancel it and go away. If we do see a continuation, we get filled, and then we either make money or we lose money. That's just the way trading goes. Pretty simple here. But like I said, we're just hanging out if there's a continuation. Let's check in on CAD. Let's see what CAD is doing here. Okay, so CAD is strengthened. So this is again where I talked earlier about pairing them up for a double whammy. I know that's not any sort of technical term, but this is where the trade is always complex because dollar is strong and CAD is strong. So if we take a look at dollar CAD, we actually see dollar is even stronger than the CAD. So it was, we're talking about 20, 30 pips. This is not a big move off of a payrolls report. It's a very small move off of payrolls. All right, do you guys have any questions on any other currencies? Like I said, we got a move, but it's not a big move. It's just a move. I wouldn't call this a big move in any of the historical matters of the US Payrolls Report. Let's take a look at an Aussie. Let's see if there's any difference between Aussie and Kiwi. Again, Aussie is stronger than the Kiwi, so we did at least pick the right one to go after. We could have chosen to go after Aussie dollar or Kiwi dollar, and the Kiwi is definitely the right call as far as between the Aussie Kiwi. You can see the Aussie has strengthened against the Kiwi over the last couple of minutes. Right now, I could just keep talking, but the trade is set. The trade is set. 56.12. If it goes below that, we'll enter. If it doesn't, we won't. And if it does enter, let's go through just quick position management. Since this is a Friday, I know that I don't have a lot of time. I'm not going to be holding this trade over the weekend, even though I actually could trade this over the weekend. My rule is I will hold risk off trades over the weekend, because if bad news happens, that will be beneficial to me. I do not hold risk on trades over the weekend. So if we were trying to be, long Kiwi against the dollar, that's more of a risk on trade. I don't hold those over weekends. But I'm not looking to hold this over the weekend. So that means that when I do my position management, if I get filled, I know that I need to be fairly short term on this trade. I need to be fairly short term to where I exit somewhere today before the weekend. So the whole question is, what do we use? We can use lots of faster triggers. We could easily use the EMA, but probably not on a 15-minute chart. That is a little too fast. I'd be looking at an hourly chart saying, hey, you know what? I'm going to use this EMA. If we get filled, if it goes above the EMA, I'm out. At any time it goes above the EMA, I am out of here. Now look, we've got, I forgot to put in our initial stop. All right, I'll put that in if I get filled. On news announcements, I always do about 0.3% on my stops. So 0.3% on 55 cents is right around 17, 18 pips. So look at that. That is bad trading. Forget to put in a stop in front of everybody. That's definitely bad trading. Usually I always just attach it to my entry order and we're good to go, but definitely blew that one today. But if we get filled, I'll throw that in. So if we get filled at 56.13, I'll be putting in a stop at 56.30. And that's going to be that on the trade. And once my EMA falls below 56.30, so again, if I get filled, I'll put in my stop at 56.30. Once that 13-period EMA on a daily chart goes below 56.30, I will use that as a trailing stop. And I'll just continually lower my stop to be right above that EMA line. And as long as it doesn't go above the 13-period EMA on an hourly chart today, I will be in it for the whole day and I will be exiting at the close. If it ever goes above that, then it'll be automatically exited, and I will take my small gain and pack it up for the week. All right, well, that is all I've got for you today. Looks like we are going to get filled. I would expect the markets have a nasty, ugly day today. This is not a good report for the markets. This is a very strong jobs report, and the fact that the jobless rate fell to 3.5%. The Fed has been very clear they want to see it around 4.5%. When it goes from 3.7 to 3.5, and the Fed has told you they want to see it to 4.5, it's telling you the Fed is going to bring more interest rate hikes to the market, which the market really isn't priced for. So we're seeing down moves across the board. Not too bad. S&P down about 0.6, 0.7%. The NASDAQ's going to fare a little worse today. We had a profit warning from AMD. They're cutting their earnings reports for the third quarter. So expect the NASDAQ to be a little bit weaker. Well, thanks for joining me, everyone. Have a great rest of your day, and we'll see if this one gets filled. If it gets filled, great. If not, then we just cancel the order, go away. My rule is I wait 30 minutes for this order after a news event. If it doesn't happen within 30 minutes, I cancel it and I go away, and I'll probably pack up for the rest of the day. Thanks for joining me, everyone. Take care. Bye.